Hey everyone, this is Kirk here again at Option Alpha, and this is the video update for the trades that we made on Tuesday, March 20th, 2018. So we had a couple new opening trades for today. We'll cover also the quick adjustment that we made to SPY yesterday on Monday, just a single trade on Monday. And again, sometimes if we have just a single loan trade, we'll just wrap it up in the next video update. That way we don't waste time doing a whole video update for a single trade. So today we had a pretty active day, getting into a bunch of stuff. Just getting back to Monday real quick on the SPY adjustment, we finally were able, and this was post March expiration, so we weren't able to get the roll in before expiration, but I mentioned on the last video update in the strategy call with the lead members why we did that, or why we decided not to rush it. But on Monday this week, when the markets were down big, we had an opportunity to actually add our 270, 265 put spread that we were going to roll from last month that just expired worthless, which was fine on that end. We added it back to create that iron butterfly position and added it for $110 credit, which was more than the $90 debit that we paid to roll the call side. So overall, we were able to basically scalp about another 20 bucks or so for each of these spreads on waiting, or I guess just getting a little bit lucky on the move down. So overall, we've got about the 270 iron butterfly still in SPY, but we reduced risk and got ourselves some extra time in case SPY does come back into our range. Speaking of SPY, before we go over the new trades for today, I just want to again kind of quickly review, although I don't do this all the time. I just think it's important today because we talked about adding new positions to kind of give ourselves a little bit more balance. But this is where basically our portfolio curve looks like right now. Let me just actually scooch this down just a little bit, might help out. But again, we're just beta weighting to SPY. So we just type in the symbol up here in the top left, SPY. Bottom is portfolio beta weighting. And so now you can see what our portfolio looks like. We're actually pretty well balanced. I mean, like generally pretty balanced. The graph is not as high vertically as I want, but we've got some pretty good premium on. I mean, we've got about $6,000 or so of premium. But you can see that we're a little bit bullish in tilt, meaning that the center of our graph is actually still a little bit lower. So if the market falls, we're okay. But if the market does start to continue to rally, maybe back a little bit from this recent drop, then we might start to slowly get ourselves a little bit unbalanced. So that's why, today we just added a couple little balanced positions to help, kind of cure this a little bit and start moving towards center. Obviously, we always do it slow. We don't want to overcorrect too soon or, just throw a bunch of trades in for the sake of trading. We want to just inch into this, right, as we kind of work through the expiration month. So we started adding some positions that give us some good balance. In the case of the Qs, we added a Q bullish position, which was basically about the 30 deltas or so. So we added about the 30 delta options. I'm not sure where the probability of profit is there, but it should be much higher than 70% because we had the 30 delta options plus the credit that we took in. But we sold the 160 puts, the 155 puts we bought for an $85 credit. We did it small, so we might add to this position. But again, it just gives us some good bullish exposure to the Qs if the Qs do happen to rally. So going to the charts here, 165 is a little bit still of a drop from where it's at right now. And the Qs have actually been pretty strong overall. So not to say it can't continue to drop, because it definitely can. But right now, this serves two purposes. It's a decent directional trade. And then two, it also helps because the portfolio is a little bit, needs a little bit of bullish exposure. So that's why it helps out. The other one that we got into today was EEM. So if you remember previously, we had sold a credit call spread in EEM, which was a directional move. Now we're coming back in and we're adding some of the put side back on, doing it again $3 wide on that side. We did just do 3 contracts today. That was the purpose. It was not, I should have explained it a little bit more in the trade comments, but we did 3 contracts, not the full 5, because we wanted to maybe give ourselves room to add another 2 or so or 3 if SEM continues to move lower and does continue to drop. Then we want to give ourselves an opportunity to add some more contracts, maybe at more favorable pricing from where it's at right now. So again, if you look at EEM, we have the call spread side up here that we sold, the 50-53s. We sold 5 of those. And then on the downside, we sold the 48s and the 45s. Now we gave ourselves a little bit of room here. So basically created an iron butterfly between 50 and 48. So we have some room, some wiggle room where the stock can kind of move generally between these two ranges, and it's trading pretty much in the middle of that range right now. But we can also add laddered iron butterflies to this if we want to later on for April. So it gives us a lot of choices here. But again, just kind of starting the process slow. Last one that we got into is, again, another position in XLU. We still maintain our stock position in XLU. That's factored into our portfolio curve, so we're still good holding stock. In fact, it's helping keep us a little bit balanced overall. But as we're doing that, we've been doing the last couple months selling covered calls on XLU and trading all around it, meaning trading iron butterflies, iron condors, all around XLU for more premium, which has helped out tremendously because XLU continues to basically trade generally sideways with falling volatility, which has been helping. So the last 2 or 3 months here, you can see general direction every single month is just about 50. I mean, it really hasn't moved. It's got some volatility heading into expiration, but pretty much every expiration over the last 3 months, it's landed around 50, which has been helpful to some of the premium that we've been selling. So look, we're going to keep doing it, right? I mean, XLU is one of those stocks that can literally just stay, in these like tight ranges, $2 or $3 wide for many, many, many months. So we're going to continue to trade it that way and see what happens. Today we sold again the very narrow iron condor, sold the 50 call strikes, the 49 put strikes, and then bought options out $5 on either end. Just starting it small with 2 contracts, knowing that we have to leave room for more laddered entries. This is all the way out at May expiration, so almost 60 days out. So we definitely want to leave room for more additional positions here as we get closer to May expiration. So as always, hopefully this helps out. If you have any comments, questions, let me know in the trade comments right below. Until next time, happy trading.